sterling. For more on finance, I'm joined in Sydney by Henry Jennings, financial journalist and strategist with stock market newsletter Marcus Today. Good morning to you, Henry.
Good morning,
those National Australia Bank results have just come in. What do you make of them?
Well, I guess they're a little bit better than the market was expecting. Also, critically, that dividend was held at 99 cents. What will disappoint the market, I guess, is the net interest margin, which was down 2 basis points, and also the bad and doubtful debts were up 7% as well. So that will worry the market a little bit, but I think the commentary from Andrew Thorburn was relatively soothing, talking about enhancing shareholder returns going forward. So I think the market will be kind of relieved on that result, but in these kind of volatile times, anything can happen.
And, by and large, that write-down on Clydesdale was expected to hit their bottom line, wasn't it?
Yeah, it was very much expected. I mean, we knew that was happening. I think the top line number of 6.48 billion is pretty good, all things considered, but that net interest margin will concern the market. That looks as if it's due to higher funding costs.
Now, some other results that we've had out this week. Yesterday we had Wesfarmers results, and Coles had some really weak sales.
Yeah, not good. I mean, it shows maybe that Woolworths is fighting back. That's certainly what the market thought yesterday, and marked Wesfarmers down considerably over 5%, whereas Woolworths was actually pretty much only down 0.5%, which was pretty good considering the market was down 83 yesterday. So there is a feeling that Woolies is taking up the fight to Coles, and certainly Coles CEO Richard Goyder yesterday was saying that they had to sharpen their pencils and they would remain very competitive. So I guess the price war between the two of them continues.
And those sales results obviously pulled down the Wesfarmers share price yesterday, but it also dragged down the ASX. What's the ASX looking like today?
Well, I think yesterday was quite significant. I mean, it was pretty weak, to say the least. At one stage, it looked like it was going to hit 100 points down, but there just seemed to be a convergence of some very disappointing AGMs, some disappointing Apple numbers. Of course, we've got the Ardent Leisure thing, and then Wesfarmers as well. So it wasn't a good day. I'd like to see a little bit more stability today, and maybe NABs will give us that stability. But certainly, we still seem to be groping around for direction at the moment, and very much beholden to the US election, and also, of course, US interest rates.
I guess the only bright spot yesterday was those inflation figures. They were a little bit better than expected, but now it's looking like that rate cut is really not going to happen on Tuesday.
Yeah, I mean, the CPI number yesterday was a little bit kind of mixed. I guess the headline does look as if inflation is starting to stir a little bit, and certainly globally we're seeing evidence of that in Europe. Certainly in the UK and in the US. So we are seeing the inflation genie out of the bottle a little bit, and those figures would tend to suggest that. So I would say that the RBA will be very reluctant to cut rates, and we should see them on hold on Melbourne Cup Day, and maybe still on hold on December as well. All
right, Henry Jennings, great talking to you.
Thanks, Del.
So, Mark and Virginia, just to reiterate that top line, National Australia Bank full year results have come in at $352 million. That's down 94% from